Now that tax season is over, a lot of people think that CPAs disappear and sit on an island with a nice umbrella drink, just relaxing for the whole summer, which would be nice. That being said, most of us are here throughout the year to basically plan ahead for the upcoming tax season. I have year-round clients that I help with their accounting, doctors and real estate professionals and other businesses that I'm helping them handle their accounting on a quarterly basis. And there's a lot of planning you could do now to help reduce your tax at the end of the year when you're preparing next April. And many people don't realize that we don't necessarily have a magic wand to make up what we could do for you when we're preparing your taxes. We need to plan ahead. And one thing that we've been discussing is now with the increased standard deduction to $12,000 per person, $24,000 if you're married, it's important to plan your charitable giving and other itemized deductions to really maximize what you can do. And by that I mean, we have a $10,000 cap on your state and local tax deduction. Along with that $24,000 standard deduction, to really get any benefit, you have to be above that level. So the $10,000, you have to come up with another $14,000 in deductions to itemize, to bump above that level. So if you have a mortgage, of course that'll help. And what we're suggesting to clients who might be on the cusp especially is to group their charitable donations into 1 year. So for example, if you give $5,000 this year, $5,000 next year, maybe you want to put the money aside and give $10,000 one year and not give the following year to bump above that $24,000. Now, if you're giving $10,000, $15,000, $20,000 or more a year, the charities appreciate it, and you probably don't have to really plan too much because you're bumping above each year. But if you're on that cusp, it might make sense to talk to your accountant about what we call grouping your donations. And what we also do is we can help you plan for your business spending. For example, if you're buying new assets for your business, we could help you properly plan on when to purchase them, when to put them in service, when to spend the money. And that would go along with us helping you on a quarterly basis in keeping your books, reconciling your credit card and bank accounts, which you might think, well, I don't want to spend money on a CPA doing that. It sounds expensive. Maybe, but what we could save you in tax knowing about your current situation would well more than pay for the fees most of the time. And we have knowledge about other financial planning topics a lot of times, like saving for retirement, proper life and disability insurance, proper investing. I know I'm licensed in all of these topics, so it doesn't make sense to just talk to us in March and April. This should be a year-round discussion, a year-round relationship that we can help you put together a proper plan to give the government the least amount of your hard-earned money as possible. Just to sort of wrap up, this tax season for me was very productive. I was able to help my clients, and I'm really able to help them gear up for the upcoming change in tax law, which involves lower tax rates for almost everybody, a change in the alternative minimum tax, where if you were subject to the AMT before, they really bumped it up to, instead of middle to high income families, to the even higher income families instead, the groups of taxpayers that it was originally meant to affect back in the 60s, 70s when it was first implemented. And one other piece of planning and advice that I'm going to give, and you should discuss this with your CPA to make sure it affects you, but a lot of states are passing laws where you can maybe, quote unquote, donate your real estate tax money to a trust and get around the cap by instead donating the money. It's not going to hold up. You might get a small tax benefit from that on the state level, but on the federal level, I don't foresee that holding up. Another way that we might be looking to go, and I've personally tried to get in touch with legislators in New York, and I know an old boss of mine has done that in New Jersey, to any pass-through business entities pay the state tax at the business level instead of at the personal level, so that it would be a business deduction instead of being capped on this personal level when you already have high property taxes. That might bring you at or above the cap.